dia a todos. É prazer estar aqui participando de mais.
Good morning. It's a pleasure to be here this morning. One more Congress organized by IBDT on international taxation. The opening panel of today is regarding territorially or worldwide taxation. And in order to address this subject in this panel, we invited the Professor Mônica Rocha, she's PhD and Master's in the University of Rio de Janeiro, and now he's reading, your resume, Professor Mônica. And good morning, Professor Mônica. Also, we invite Professor Eric Kemmeren. He is professor at Tilburg University from Netherlands, and he's now reading your resume, Professor Eric. Good morning, Professor Eric. We invited also Professor Fernando de Man. He's well known from IBDT, professor at Maastricht University, Brazil, the Netherlands. Now, Professor Fernando, your CV is being read. Professor Fernando, good morning. Also, as speaker, Dr. Gustavo Haddad, well known by all, professor at Insper, Brazil. And Professor Gustavo, your resume is being read. And we have also the attendance of our dear Amanda Panissa. She's undergraduate in tax law by IBDT. So good morning. I thank your attendance and your availability to attend this first panel. So it's going to be very interesting because, as you can notice, all our speakers, they are highly qualified academic and professional experience, and even experience on the legal judiciary area, like Eric, Deputy Justice at the courts in Netherlands. So the subject at issue is regarding territoriality and worldwide taxation. It's a fashionable subject, especially after the USA changed their legislation to adopt a system closer to territorially taxation. So it's fashionable now, so a huge debate worldwide. So we are using this momentum to dedicate the first panel to this subject. Briefly now, with no further ado, I pass the floor to Professor Eric. Before this, Professor, I would like to explain how this panel will work out. First, we will divide the panel in 4 parts. The first part is general concept of territoriality. The second part focus on multinational companies, what they're doing currently. The third part of the panel is Brazil. And the fourth part, we will talk about the future, trends. So Professor Eric, I pass the floor to you, Professor Eric.
Thank you very much, João, for your kind words and for the invitation. I'd love to be, I would say, in Sao Paulo. My last experience 2 years ago was fabulous. It's a wonderful place to be there. I'm also very happy that that we have 5 hours in between as a time gap. We organized a online conference also due to COVID-19 in Tilburg in May. And my colleague and friend, Louis Jouer, was one of the panelists, but that was at 9 o'clock in the morning, Central Eastern time. So that was 4 a.m. in the night, middle of the night, where you're supposed to be in bed when Louis was with us. And really, really, I still appreciate that very much. So, and I'm happy that we have a better time slot now. I try to share my screen so that we have also the slides available. Yeah, what I will do is to start with a conceptual approach on the territoriality or worldwide taxation of M&Es, and share with you international experiences and my ideas. What direction are we going to? As João already explained, there are 2 parts, and I have the pleasure to be part of both parts. So I will start in part 1, more the conceptual issues. What is territoriality and worldwide taxation? In that context, I will address specifically what is the source of income of an M&E, but also what is a residence, which is closely connected to worldwide taxation normally. In part 2, I will share with you my ideas of recent developments, you could say, and recent is maybe, yeah, if you can take into account that the treaties were developed in the 1920s of last century, then these developments are recent, the BEPS discussion, but also regional experience. And coming from Europe, I have selected the European Union. What is the direction the European Union is going? I will address the Parent Subsidiary Directive and the Anti-Tax Avoidance Directives. But what happens at a national level? So actually 3 parts: global level, regional level, national levels. Well, João already addressed the USA. We will have a closer look to the Tax Cuts and Jobs Act and some recent developments in the Netherlands, the introduction of a conditional withholding tax on interest and royalties, a proposal on the informal capital concept, which was explicitly addressed 2 days ago during the yearly budget, that it was announced as a legislative proposal. And there is also a proposal of a left-wing party on the conditional exit tax or dividend tax. Well, first of all, we have to know, of course, what are we talking about when we are addressing territoriality and worldwide taxation. Well, normally the territoriality principle in the tax world, we address that in the context of taxation of income produced in the state concerned. So where is the income produced? And that is often related with what we often refer to as the principle of source. And as part of that, I would like to emphasize more the principle of origin. What I advocate as should be the interpretation of the principle of source. But what is source? And we will go into more detail later on. In my perspective, these principles are closely connected with the direct benefit principle. And that allocates tax jurisdiction to the state from which you benefit from its infrastructure in the most wide sense, and therefore a contribution to finance that infrastructure may be asked. That's what we call tax. But also, and that is maybe contrary to the mainstream, to the ability to pay. Where you create your ability to pay, where you create your income, that is also the state where you create your ability to pay. Therefore, you should, connected with the direct benefit principle, also contribute. The universality principle is closely connected to what we often call the worldwide taxation of income and capital. And that system refers much more to nationality as a linking pin or the principle of residence, the place of residence. But actually, over the last period, we have seen a third trend, I think, and that is the notion of single taxation, which is a mix of territoriality and worldwide taxation. Somewhere it has to be taxed. Well, let's have a closer look at the 3 categories. Source. It's often referred to in discussions, but there are various meanings of source. And that makes some discussions, also on a global level, but also on a regional level and a national level, sometimes very confusing because people start with different notions. This is just a list, not an exhaustive list, but to give you some ideas. Where the property is located, or where the property is used, that is the place where the source of income of an M&E is, or where the services have their effect, or where the state with the identity of the payer is linked, but also where the payer is located, or from where the payment has been made, or where the payments are taken into account as expenses. And of course, in the BEPS discussion, that focuses more or less also with the previous linking pins where the market or the user jurisdiction is. That is often also referred as source. However, is that actually the source? Well, a more physical presence is where the services are performed, so where the people are to perform services. And that comes close to what I call the principle of origin, where the origin of the income is. But we have also the much looser linkings, where the contract is signed. And we have seen that in the US in the past, or where the contract is executed, or the state whose laws govern the contract. Well, in my view, the principle of source should be interpreted as the principle of origin. And then you come to where the ability to pay is created and where you directly benefit from the infrastructure. And that should be done then through an allocation of tax jurisdiction on income if the income has been created through a substantial income producing activity within the territory of that state. And I was very happy in 2015 when I read the OECD report on BEPS, which said, well, we should ensure that the profits are taxed where economic activities take place and value is created. And that comes very close, I think, to the principle of origin. Because what is the origin? That is an activity, in my view, of an individual who adds an intellectual element to the things. But not every what is called source is origin, but origin is part of the group of source definitions. And what is substantial then? Well, that is any activity that forms an essential or a significant part of the activity as a whole. So minor activities will be ignored in this context. Well, is residence then a good alternative that has less complications or less discussion? But the first question then, of course, is what is a corporate income tax? Is that a tax of an entity concerned? And if so, should then the residence entity be decided for the allocation of tax jurisdiction? However, here also we have confusion. Why? Well, there are different links to identify the residence of an entity. Place of incorporation, registrar's office, central administration, central management and control, place of effective management, principal place of businesses. They all are there in practice as well. And what do we do with hybrid entities? That makes life even more complicated. Or should we say, well, corporate income tax is not a tax of an entity, but of its participants? Does that reduce the complexity or the questions? Well, I would say no, because then also we have to identify the residence of a participant based on domicile or the permanent home, central vital interest, habitable abode. We see also 100 days rules, and even nationality, like in the US, is still a linking pin. But what do we do then with listed companies? Shareholders are dispersed around the globe. Does that solve the problem easily? I don't think so. Finally, for this part, well, we have the notion, I do not call it the principle like some of my colleagues do, because I don't think it is principle based. It is only that income in cross-border transactions should be subject to tax once, and that is neither more nor less than once. But what do we do? Is it necessary then to tax the same subject? Well, maybe it's not the emphasis of this notion to put the emphasis on the subject, but more on the object, because it is on income and cross-border transactions. But do we have the same object then? Is that necessary? What we also see, of course, is that the taxable object and the taxable base is determined country by country. So that's not easy either. And it should be taxed at a fair rate. But what is a fair rate? Is it absolutely necessary to have the consensus? May you have a 9% in Hungary, for instance, where you have 21 in the US? Is Hungary not fair? And if you don't have a corporate income tax because you don't need it in your structure, is it not fair either? Well, these are some ideas to share with you, and I will use them also as a benchmark to see what are the trends on the global, regional, and national level. So after this is my part, and João, I give the floor back to you, please.
Obrigado, Eric. Nós vamos passar agora a palavra para a Mônica. Mônica.
Thank you, Eric. Now we pass the floor to Mônica. Mônica, what multinational companies are doing?
Well, good morning, everyone. It's always a pleasure to come back to Brazil, even if in the Zoom world. And I'm here. I would like to thank the organizers of this seminar for the invitation to talk with my homeland. Okay. What I present for you today are some perspectives about what corporations are really doing in a worldwide basis, and try to bring you a bit of my experience while I was a government tax attorney for the Ministry of Finance of Brazil on how to deal with some puzzling questions, that the adoption of standards that are not perfect bring to us when we have to make decisions regarding the adoption of tax policies. Well, first, I will start my presentation with what would be better if we live in a better world, a world where countries would cooperate, would agree with where value is creation, where substantive activities take place, which I'm very skeptical right now that it would happen in the current negotiations. Well, what had happened to corporations? Why are we facing such difficulties to tax them? First, corporations used to be territorial units. They were in a certain place or for certain tax jurisdiction. So what happened? With the globalization, the improvement of means of transportation and communication, those corporations could go abroad. They could establish subsidiaries in other countries, take benefits from the work of other corporations, and establish supply chains. And that changed a lot the work of tax administrations. Why? Because now tax administrations had lost control under those activities. Before it was so easy. Every division of the same company were usually in the same place. And now you have IP rights being managed by a sub. You have some goods being provided for other sub in another tax jurisdiction. And that brought a lot of difficulties because you could not check on site what was really going on. Although the parent company and where the decisions were made in a global basis were in a certain tax jurisdiction. So states decide to agree on to adopt some rules to deal with this new situation, mainly in the US, where the most parent companies were located. But what happened? Instead of considering those parents and subsidiaries or even supply chain companies as a single unity, they divided. They were considered as different units. With this, we have created other kind of problems. For example, for transfer price, let's take the example of transfer pricing. Were all the divisions of a company in the same place, would you consider the sale of a good to another division as a market transaction? If the good moved from the first floor to the 10th floor, would you consider it as a market transaction? No. But now, as it moves abroad, we try to make this transaction be a market transaction. That's a fiction. And those are the rules of transfer price. So that's not a surprise for me that you can create zillion methods. They won't be perfect. You will not address the complexity of a transaction with no comparables. And so what happens? When we're dealing with transfer price, first we assess if the transaction has a comparable, and then we go to safe harbors. You have to research the positions of the tax authority, the law and regulations to find a safer harbor, because nothing is perfect, not sure. And if you don't find a safer harbor, you go to the advanced prices agreements. No? That's the last recourse. But why? Because this is a fiction. Those transactions are not market transactions, but for tax purpose and to guarantee tax base, we create this fiction. So that's a lot of problem. So what would be the better solution for if you live in a better world? Would be the adoption of a global consolidated corporate tax basis that would consider all the units of a multinational as a single business entity and agree on a formulary apportionment of the tax basis. However, that's not the real world, at least not by now. I'm very skeptical about those negotiations, the current negotiations. And that left us with two standards: the adoption of territorial-based rules or worldwide-based rules. The territorial standard was primarily adopted by European countries. And why? Because they were under a colonial system. So territory abroad would be considered as their own territory, or at least they would have some kind of political and tax sovereignty exercised over those territories. And the other side, the US, which was not a formal colonialist country, adopted the worldwide basis. They would tax income that were attributable to their parent, even if it was derived not within the territory of the US. And that made sense until a certain point, because now the transactions and goods and services that are being traded and that were the most valuable ones are mainly intangibles, in form of intangibles. And that's really difficult to control, to evaluate. And in my opinion, that's the reason why today both Europe and the US are adopting mixed systems. So let's go now for what I could say for you due to my work and experience. When you work for the government, the first point in a decision making, it's never only about taxation. It's about taxation and job creation, taxation and investments, taxation and environment. We have many concerns that we have to take into account. So it's not only the tax issues or the tax results from the adoption of certain tax policies that will be considered. We have to negotiate when we are the Minister of Finance. We have to negotiate with the Ministry of Commerce. Today it's easier because they are under the same minister. And you have to negotiate with the environment. You have to negotiate with the Minister of Education. You're never alone on the table. So that's the first year. We have to choose among all the options that we have, because they are standards. The standards are not mandatory rules. They are not very specific. We have a range of options that you can adopt that will be compatible with a standard. So that's the first layer. We have to find those that would be political, palatable for all, for the federal government, for the government as a whole. Then comes the second layer. We have to do the math. Why to do the math? Because none of those systems are perfect. We'll never reach a perfect rule, a perfect application of the standards. So mainly for developing countries, we have to analyze the costs. What will be the costs for the taxpayer? What will be the costs for the tax administration? Because sometimes when people talk about taxation, they totally forget that the costs are not only for the taxpayers. We have huge costs for the tax administration. Every single change in taxation laws nowadays implies changes on our systems, on cloud storage, training, files, forms. It's very costly. So to change, if we have to analyze all of that, we are not gonna choose what we think that would be the perfect rule. We have to choose the feasible. We have to assess the costs. So you have to assess deadweight losses, opportunity costs, how the increase or decrease in tax rates or tax burden will affect compliance, because you know that if you reach a certain point, it will be, let's say, it will be attractive to be non-compliant with tax rules. So when we're working for the government, it's not lawyers alone. We have economists, we have statisticians. It takes, sometimes we stay three weeks immersed on a problem. We used to be at the ESAF in Brasilia, discussing, testing, modeling, reaching conclusions to find the less costly option. So that's a long process. And then we go to the legality. Are the options that we have chosen compatible with our domestic laws, international laws? And it's not all about the OECD standards. We have to analyze aviation, bilateral agreements, the WTO investments. That's a play of international contracts that we have to analyze. And we do that. But sometimes you don't notice why. The last layer, the politics. When you draft a bill, it's not the perfect tax legislation, the perfect narrative. That's a negotiation text. And we'll have to use all the tools involved in a negotiation to reach a bill. Because we have to negotiate. We have to leave some room to negotiation, things that we can give up, others we don't. So we have to talk with politicians. We have to hear, they have to hear their base, political base, talk to governors, local governments, the state governments. And then I think that's why sometimes you don't notice all this work behind the bill. It's because we have to comply with that too. Politics. That's a big part of every tax legislation. And in the case in Brazil, after all of this, we still have the litigation because we live in a country where the litigation is the culture. It's changed. We are doing much better. I would attribute that improvement to the relationship with the CARF, our administrative tribunal, tax tribunal, that has improved a lot the way it provides for the decision-make procedures. that we cannot deny. We have made huge developments in this area, but we are still a country with a litigation culture. So then after all this, we have to deal with the litigation. And sometimes I was involved in all those processes. And then, okay, they're litigating what we had said that was the right position. That happens all the time. But we know when we're working for political entities, that's part of our jobs. And with that, I would finish my presentation. And I really wish that I have contributed for you to understand what happens, how difficult to choose to make a choice between the territorial standard or the worldwide basis. We have to be very careful because we're developing countries. Some things Europe can adopt, US can adopt, but if we adopt, we wouldn't have foreign investment come to Brazil. So we have to be very careful. With that, I would like to thank you everyone for your attention, for the opportunity. Thank you very much, João, and the organizers, Amanda as well. Thank you, João.
Obrigado, Mônica. Eu acho que a Mônica fez.
Thank you, Monica. I think Monica made an interesting presentation regarding the segmentation of activities by companies happening today and problems that are arising from this segmentation. Gustavo, how is the Brazilian legislation addressing territoriality or taxations or worldwide taxation? So good morning, good afternoon from those in Europe or different places. I thank IBDT for the invitation to be part of this congress. I'm very honored. And as João just mentioned, during this first phase, I will address the Brazil's outlook currently regarding territorially and worldwide taxation. And then second, we will address the future. I will try to project my slides. I hope it works. Well, how Brazil deals with or better saying, the choices made by Brazil to tax residents regarding income out of Brazil. Well, briefly, I will talk about individuals and then I'll talk about multinationals or corporations of Brazil investing abroad to explain the main peculiarities of the system. As for individuals, our tradition for a long time, since the 40s, we adopted the universal taxation for individuals in a way quite simple. It's a system that levies taxes on income earned a certain out of the Brazil when it's noticed as the legislator says for individuals we don't have a there's 70, let's say, CFC for individuals, regardless of the true apportion of incomes for individuals. There was an attempt in the past, '03, to introduce this, but the Congress, the Parliament of Brazil did not accept it. So we have basically two ways of taxing individuals abroad. And so we have an ordinary way of doing the taxation, a traditional one, ordinary rates up to 27.5% for work dividends, royalties, rendering of services. And then we have one which is gains, capital gains and financial investments with reduced rates and more progressive, 15 to 22.5%. The universal taxation for individuals, avoids double taxation by means of credits, tax credit. Credit is allowed when there's a treaty or also allowed unilaterally when you prove there's proof of reciprocity, where you can prove that another country would give the same treatment in the opposite scenario. It's well known that Brazil has a shy treaty networks. We are increasing, but three absence is USA, UK, and Germany. But for these three, the tax administration of Brazil recognized the reciprocity, and the foreign tax credit is granted regardless of additional proof by taxpayers. So a classical system for individuals with taxes according to income received and double taxation avoided through credit. The big challenge of our system is regarding legal entities, multinationals, the treatment given to Brazil's multinationals. So we import capital, but especially since the year 2000, there was an important development of activities by Brazil's multinational companies that started to expand and work and have a performance out of Brazil. So our uh, universal basis tax system as conceived affect the performance of multinational companies of Brazil investing out of Brazil. And this is what we're going to address during this first part. So universal basis. So actual basis taxation in Brazil of income accrued by all controlled entities, regardless of. So the best known one is that implements a system of taxation that some know as automatic of controlled companies. Legal entities of Brazil investing abroad, they tax profits of controlled companies abroad automatically by the end of each term of a certain, regardless of the effective apportion or availability of profits to Brazil's parent company or the type of, regardless the type of income, passive, active. So the tainted income as the countries adopt. The general rule of Brazil is type of income, a certain profit, it's taxed by the parent company in Brazil by the end of the certain period. The level of taxation is relevant. And regarding substance or any other considerations also are relevant for the enforcement of this legal system. Hands-on, the current system in Brazil enforces the regional CFC's legislation for all scenarios, from genuine, abusive, or not. The remedy adopted in Brazil since '01 is this one. There were some changes, 14, that changed part of the system, but the essence of controlled companies taxation remains the same. How these resident corporations are taxed. So the profit by ordinary Brazilian rates, general 34%, except financial institutions, we have 45%, and innovation. One of the main innovations of 014 was the creation of presumed credit of 9% for certain profit of controlled companies that work in some sectors appointed by the legislation, beverage, food, construction, and manufacturing industries in general. For these sectors, the rate is 25%, 34% minus 9. This gives some relief for Brazilian multinational companies in this sector. And the effective rate is 25%, but this one that it's relevant omission, which is services, for they are not including presumed credit. For a multinational acting services area, taxation on profits of control will be 34%, and we will see with the trend of reducing global rates for income, this rate of 34% trends to be a punishment. Another peculiarity of our system is that each entity controlled is taxed separately, and profits and losses of it does not mix with those from other controlled companies. There was an innovation in 014 that allowed the consolidation of some entities that meet certain required inspired on CFC legislation of other countries regarding active income as level of taxation that not that low, exchange of information, non-tax haven. So until 22, it allows the consolidation, but this consolidation requires the consolidated entity abroad have some typical requirements of CFC legislation. So amongst profits of controlled companies abroad, profits and losses, it allows to levy taxes when these requirements are met. A pool of outcomes on not each entity separately. And our legislation also has a unilateral measure by which all tax paid abroad is credited against an tax against income due in Brazil. So it's known as foreign tax credit. So tax, taxing regarding the apportion or distribution is not rare in the practical side. The taxes abroad to be paid after the Brazilian tax is due and payable. Although we use mechanisms to allow the offset, the level of controls and compliance is high, and there's an anticipation of taxes because in Brazil, taxation happens before the moment the tax abroad is paid. This in the current system involves the compliance level. Just like all system of universal taxation, we have some peculiarities that make more difficult because the compliance cost is higher. So lots of debates surrounding it, especially the tax litigation regarding the statements of the base to be taxed in Brazil. If the profit to be captured and taxed here, it's booked of the controlled company of the excise of Brazil tries to prevent the deduction of expenses booked of controlled companies abroad. This will suggest an relevant litigation and also likewise regarding foreign tax credit, regarding paid taxes abroad, either by statements of this tax, but also those temporal issues I just mentioned. And also we have a litigation that since '01 that keeps on being enforced regarding possible conflicts amongst our system for automatic taxation and treaties to avoid double taxation. So it's not a subject matter today in this debate, but there are relevant litigation on it regarding this subject I just mentioned. This set of elements results in, regardless of the choice between being universal territory, it results that the Brazilian system leaves and there's a perception it's not fully uniform, but many players in market have this perception that, and the academia also, that our system makes the performance of Brazil's multinational companies more expensive, less competitive than those of other countries' multinational companies. Some factors here I listed five to deal with it. The two first one I have already addressed, taxation regardless of realization, regardless of profit apportion. It brings a cash flow problem. The profit reinvested by the control company is taxed in Brazil. We have the problem regarding high compliance cost. And but recently, during the last years, with the global reduction of global trend reduction of CIT rates, Brazil did not follow this trend yet. And the second part, we will address this, but having kept a level of nominal rates high, while other countries where Brazil potentially invests reduced their rates, makes the difference of taxation. Even with our system allowing a full tax credit, the difference to be paid in Brazil has increased. And this has been seen in the practical level. A company without assumed credit that taxes 34% rate the controlled profit. If they do this in a subsidiary instead USA in 21, it will have to add in Brazil the difference between 34 and 13, while other countries or with different systems would make this complement did not exist. Let's say if we have the territory aspect. So this global reduction has sharpened the disadvantage of Brazil's system. Additional factor well known by all, Professor Eric mentioned at the beginning, several countries, including USA, migrated or are migrating to a migration to territoriality by developed economies. So compared with ours, we are not that competitive. The last factor is not directly related with the choice of Brazil's legislature for automatic universal basis taxation, but it's a fact that our network of treaties do not reduce substantially the tax levied on dividends for the portion that controlled companies do for the Brazilian parent company. Using the example again of USA, the USA subsidiary of a parent Brazilian company, when they apportion dividends, these dividends are taxed on 30%, the rate, nominal rate of enforced in USA. When you combine higher WHT with the high corporate level with automatic taxation regardless of the apportion and tax withheld at source high in the distributions of sub companies, you reach a system where upon does not make an investment, does not make easier to invest in Brazil, Brazil's investment, I'm sorry, abroad by multinational companies. This also has given way to a trend of inversions. Multinational companies of Brazil to take into account plans of inversion or transfer of controlled parent company out of Brazil, and also for the new groups that are expanding internationally. This ends by motivating that the expansion is made by means of what I call sisters of the Brazilian company and not daughters. Let's say our system does not foster Brazilian companies to create controlled companies abroad and foster owners and partners of Brazilian company to in- incorporate system so partnerships in the country where they want to operate. So this is a picture I wanted to explain during this first part. Now I pass the floor to João again.
Obrigado, Gustavo.
So we will move on with our panel. Thank you, Gustavo.
Fernando
I pass the floor now to Fernando, and Fernando will answer the $1 million question. What is the best thing, Fernando?
What's best? Territoriality.
Obrigado, João. Pergunta dessa está querendo me complicar um pouco, hein? Eu não vou entrar na questão do quem é melhor, mas deixa eu trazer um pouco aqui algumas ideias que normalmente se tem sobre as duas, para nós pensarmos o que pode ser melhor e até internacionalmente podemos, talvez, tentar dar um incentivo maior. Mas antes de eu começar, eu queria, até aproveitando o que o João falou, agradecer sem dúvida o convite para ser parte do painel. Como o João brincou, já tem um certo tempo que eu conheço, eu me recordo, na verdade, do primeiro congresso do IBDT lá em 2005. Eu estava na faculdade, foi quando eu comecei a me interessar por tributário e houve congresso na faculdade. Então, é um prazer muito grande estar aqui hoje do outro lado da mesa para participar do congresso. Mas, realmente, a ideia, e aqui até vocês vão reconhecer aqui alguns comentários, o professor Kemmeren já fez, o Gustavo, a Mônica, é que tem se notado uma mudança um pouco de visão e que, historicamente falando, sempre houve, principalmente se nós pensarmos nos países da Europa, um foco em uma visão mais territorial da tributação. E estou falando aqui realmente a tributação empresarial. E sempre houve uma discussão, nesse caso, e que nós fomos acompanhando ao longo do tempo, que os países que ainda estavam muito voltados para a tributação em bases mundiais foram, ao longo do tempo, mudando um pouco o sistema para tornar um sistema mais híbrido, mais próximo à territorialidade. Então, logicamente, o comentário que a Mônica fez, não existe uma situação perfeita. Não existe uma situação perfeita. Sempre teremos que fazer um mix da situação. Mas é interessante pensar que a ideia da territorialidade ela é adotada há muito nos países, principalmente na tributação empresarial. Tem aumentado o número de países que acabam cedendo à ideia da territorialidade e ainda assim ainda se vê muita discussão sobre se seria uma opção viável. E por isso é interessante pensar e levantar um pouco quais são os principais argumentos normalmente utilizados contra e a favor da territorialidade, para nós tentarmos pensar e ver, tipo, existe realmente uma diferença tão grande para o que nós temos quando se fala em base mundial? Os problemas são tão grandes assim como se fala? E do mesmo jeito, será que os benefícios são tão gritantes que não faz sentido nenhuma mudança? E é por isso que eu queria trazer inicialmente essa ideia de que sempre pensem sem dúvida nenhuma, já existe uma adoção da ideia de territorialidade muito grande no mundo, sempre voltando até um pouco à ideia da competitividade e do fato de que se você está desenvolvendo um negócio no exterior, você deveria estar tributado da mesma maneira que quem está naquele local. E com base nisso, nós vemos que, principalmente nos últimos anos, com a discussão dos Estados Unidos, se eles deveriam ir para uma base territorial ou não, nós vimos muitos argumentos sendo levantados contra a territorialidade. Então, existe uma discussão muito grande sobre o fato de se diz, bom, a territorialidade, e até nesse ponto interessante, a Mônica falando, na visão dela, o sistema perfeito é tributação com base mundial com fórmula. Eu acho que a gente discorda bem nessa situação, mas um argumento que as pessoas trazem para ser contra a territorialidade, que normalmente justifica a base mundial, é justamente essa ideia de que haverá uma perda de receitas para o estado da residência. E o que torna esse argumento interessante é porque, em primeira vista, parece até natural nós fazermos essa associação. Se antes eu posso tributar em bases mundiais e agora apenas o que está acontecendo no meu território, logicamente eu teria uma queda na receita. mas certas pesquisas e análises feitas sobre países que fizeram essa transição para tributação de base territorial mostraram que não houve uma queda de receita tão grande como esperado, e às vezes nem houve queda de receita, tinha uma manutenção, em alguns casos, um crescimento. E isso porque a ideia que nós temos que pensar é que justamente esse sistema de territorialidade puro será uma situação extremamente rara. Os próprios países que adotam a territorialidade reconhecerão mecanismos para tentar conter o uso abusivo do sistema. Então, sempre temos que pensar que esse alarde tão grande vai ser ruim para o país, vai fazer até um certo pouco de terrorismo, vai faltar dinheiro para a educação, vai faltar dinheiro para a saúde, se acontecer. Não necessariamente é verdade. Nós temos hoje, em boa parte dos países, normas anti-abusivas que estão justamente tentando garantir que a territorialidade está sendo aplicada da maneira correta. E também é interessante sempre que nota-se essa discussão que esse é um potencial problema da territorialidade, que nós também temos esse problema semelhante quando nós falamos efetivamente em tributação em bases mundiais. Logicamente, aqui eu estou excluindo um pouco o Brasil, apesar dos problemas que o Gustavo trouxe, porque nós sabemos que a nossa suposta norma CFC está mais para uma anti-experimento, mas a própria tributação de base mundial já vem acompanhada de um diferimento até a distribuição. Então, também se pode haver uma construção que isso levaria à não tributação daquele rendimento obtido no exterior. Então, esse fato já meio que assimila um pouco os sistemas. Do mesmo jeito, quando se fala muito em que haver uma tributação base territorial é um grande incentivo para se investir no exterior. Além nós podemos ter uma discussão sobre se isso é algo ruim ou não, nós vemos países que têm como política incentivar que as suas empresas vão para o exterior para elas crescerem, e isso acaba retornando como benefício para o país. Nós temos que pensar que o investimento para ir para o exterior acontece não apenas pela maneira que você tributa. Uma tributação em bases mundiais com uma alíquota alta, pegando aqui o exemplo do Brasil que o Gustavo trouxe, pode levar ao mesmo incentivo para as pessoas. Então, os problemas levantados pela territorialidade podem ser facilmente notados, também acontece no sistema de tributação de bases mundiais. Uma outra ideia trazida sempre é que se você tributa em bases territoriais em vez de mundiais, você está gerando uma vantagem para as multinacionais em relação às pequenas e médias empresas, porque as pequenas e médias empresas não estarão no exterior. Mas então aqui o que
Okay, so we carry on. The idea that you are being taxed and it's no incentive for the multinational companies, it's a false problem because multinational companies, depending on their size, and they are working abroad, they have more opportunities. Regardless the system they are using, if they are looking for a way to have a better system, they will see the importance of the use of anti-abuse norms or rules if this is what they are looking for in that objective in that country. A problem that is interesting to address, and Eric has mentioned, there are many views, different views about what would be the source. We can have now another discussion. If the focus of the OECD, we are taxing on the value that is, you may not just lose step and based on territorial aspects. If we do not have a consensus, we may have a loss concerning taxation and collection and opportunity to tax. Because if you consider worldwide, the residence country will call to itself this residual taxation. So in that case, you give a small problem in some cases. The idea of territorial aspect, if it's well defined, it's perfectly in agreement with the idea of the BEPS project. So you have to note here that the arguments normally used to go against, to repel, based on territorial aspects, saying that it's not so good idea. But if you consider worldwide basis in taxation, it's an attitude. It's the taxpayers will have another attitude. You can have some potential here globally in a vast way. On the other hand, when you consider the benefits, eventual benefits in territorial aspects, exactly the first one, the idea of competition. And here, it's interesting to note, if you read about this theme, and what's commented is the idea of competition that is pursued by the United States. If you consider worldwide what they were doing, they are not in a competitive way that is considered worse than the countries that are in territorial aspects. Why? Effectively, in the idea that the companies will go abroad and you get some tax planning that is good. You may not feel competition very much, but you note another interesting point, competition. The companies go abroad and compete, but the competition in the country domestically, if you see the rank that you have annually when you talk about the OECD countries and the tax competition in the country over the last 6 years, the champion was Estonia, that has a territorial system. If you consider the top 10, most of them adopted territorial system. Logically, only that is not the reason for the results. But 6 years ago, France, that has territorial system also, is the last in the rank. But to note a correlation where i.e., the countries are having more territorial taxing, and they have a simpler system and more competition in the country domestically. It's an attraction point. So the idea of benefit that Gustavo has mentioned, the companies try to maintain the money outside the country, and so the federal aspect, and also the competition, and the country finds a way to change the head office to another country. And okay, if you consider the United States are not being taxed, logically, you do not have a discussion about abuse here. But in fact, the concern is smaller. Litigation is not considered here. Taxpayers and revenue, and is it valid to avoid taxation? If it happens abroad, it's not a case that the taxpayer will have to discuss this subject. We will not lose time with it because it's clear. The idea per se of the territorial taxation, it goes pari passo with BEPS idea of having this taxation and taxation single tax, because effectively via single tax, you can do it worldwide. So it's collecting when the source is not the taxing. So if it's happening at source, you're respecting what BEPS says. So what's easier in terms of compliance, if you take aside some cases that are more complex to avoid abuse, anti-abuse situations. But in the whole, as a whole, it shows that territorial aspects, it's a bias that's very interesting. Of course, you have to discuss what the countries are adopting. We have to adopt as well. No, it's not like that. Competition in some countries, adoption of the system, the fact that part of the time that taxpayers is focused on planning to avoid taxation at residence, then it's avoided in this case. The companies abroad, competing, the reduction in terms of compliance, it's according to BEPS. So at that moment, BEPS effectively showing how taxation will be in the future. So it wouldn't apply here. If you take into consideration of the OECD taking a disadvantage in many countries, so what's bringing here is a system that can give path to more harmonization and going according to BEPS. So we're looking for countries that are coordinated in the actions. And we're bringing two countries that are not taking the territorial aspects yet. They can have that as an option with measures that will help countries in development to compete correctly. And so the next lecturer will talk about it as well. So in Brazil. That's what I wanted to present, and I am in my 15 minutes. Thank you very much, Fernando. And now we pass the floor to Professor Eric. Would you tell a little bit about the trends for the future concerning territorial aspects?
Yeah, thank you for having the opportunity again to address trends then in around the globe in respect of territoriality, worldwide taxation, and single taxation. Of course, the selection made is trying to focus on important trends, but to a certain extent, of course, it's also a subjective selection. Nevertheless, I think that we can learn from it in what direction that we go. And in that respect, I think, yeah, like Fernando will address as well, where is the, what is source, where is the value created? In my perspective, indeed, that is where the individual adds the intellectual element to it. So follow the people and you find where you have to tax the income. And that's the idea. And to address directly a question I saw in the chat of Giovanna Portolese, if I pronounce it correctly. Indeed, if you look at intangibles, it's not the source where they are used, patents, for instance, for the medicine, but where they are developed by the human beings. So indeed, that was one of the problems I think we had to face in the structures that were applied by Google, by Apple, the so-called double Dutch Irish sandwich, that at the end, that was an issue that the income was not taxed in the US because of the combination of the check the box rules and well, more or less not applying the subpart F rules, and also that the cost contribution agreements, so a TP issue, were not in the right place. So it was not a problem of not taxing in Ireland, not taxing in the Netherlands, but the problem was not taxing in the US. And we will see that partly that has been solved by the Trump administration. We can say a lot about maybe the Trump administration. I will not do that. Am I a supporter? Not really. But this administration was the first administration that really tackled the problem. So that should be mentioned as well. But I will address it later on, I would say. Well, one of the elements, of course, is that the structures of Apple, Google, etc., triggered a lot of discussion and were actually also the foundation for BEPS Action 1. In this way, the tax challenges of the digital economy. And well, what we are now seeing is the development to the market user jurisdiction. So despite the fact that there is no physical presence, so there are no people in that jurisdiction producing the income, no, the market determines that that is a source. So this is clearly not in line with the principle of origin, what I advocate, but this is a other interpretation of source as a market user jurisdiction. Then we have action 4, and that also you could say is a element of source state taxation and territoriality. In this way that the interest deductions are limited. However, I'm not in favor in that as well, because actually then you are taxing the wrong person. So that is not the ability to pay of the creditor is increased, whereas the payer, the debtor, his or her or its ability to pay is decreased. And by limiting the tax deduction of interest, you are taxing the wrong person. But it is a signal of territoriality, you could say. Well, preventing the granting of tax treaty benefits in inappropriate circumstances. If a source country does not have to reduce its taxation, that will contribute at least to strengthening its position. But as we will see, that the same is true also for the state of residence. Well, action 7, that is, I think, more an example of strengthening the source state taxation and more closer to origin. That is that artificial avoidance of permanent establishments are avoided. And maybe the best example of strengthening territoriality close to the principle of origin is the transfer pricing group, the actions 8 up to 10. Why? Well, the significant people function is dominating over there. And I think that is a good approach. And therefore, it's aligning the transfer pricing guidelines, you could say, is a good approach, but it's not very consistent with the actions in the context of action 1 at the market user jurisdiction. So you could not say, I think, that the OECD is rather consistent. And then the pillar 2, a part of that, the undertax payment rules, so not allowing the deduction or including a withholding tax if an insufficient tax is levied on the side of the recipient. It's also strengthening the territoriality principle, but that is not close to principle of origin. That is any source as listed, maybe. Well, if you look at strengthening the worldwide taxation, and that may in its effect be even stronger, TP, transfer pricing leaving aside, is including controlled foreign company legislation that is effective, and that is strengthening the situation of indeed resident companies. Well, and most parent companies are in capital exporting countries. And that happens to be often high income countries and less in low income countries and middle income countries. So this benefits probably the original and traditional OECD member states most. As said, combating abuse is under treaties not only in the benefit of source countries, but also residence countries. They do not have to give avoidance of double taxation. Well, in pillar 2, we see also a strengthening of the residence states, so also probably of the high income countries, by the income inclusion rule, which is similar to CFC, switchover rules, not providing an exemption but a tax credit, and the subject to tax rule that you can only get a treaty benefit or benefits when the income is actually subject to tax. Well, that's on a global level. Coming from the EU, I also would like to share some trends in the European Union. And what you see there is also the 3 lines, you could say. Well, territoriality, the interest limitation rule, well, that is similar, the IBDT rule, to what we have seen, the suggestions made by the OECD. So the same observations and criticism can apply here. a GAR, concentrating on corporate income tax. Well, if it refers to non-resident companies, then it is strengthening the territoriality principle. And amazingly, you may say, why is the CFC mentioned under territoriality? Because that's a typical feature of resident state taxation. Yeah, but it is a rather typical rule in Article 7.2, paragraph B, what is actually more or less, or maybe only, applying the arm's length principle. So if the activities are carried out at the parent level, but the property is legally property of the subsidiary, then that must be taken into account, and an arm's length remuneration must be taken into account in the relationship between the parent company and the subsidiary. But it's actually only the arm's length principle to be applied. So it is labeled as CFC, but actually it's not CFC, I would say. Well, worldwide taxation for hybrid dividend payments in the parent subsidiary directive, we have a special rule. And that rule runs next to the anti-avoidance tax directive. And what is here the idea? Well, if the dividends or the remuneration is deductible at the level of the payer, then the recipient should take it into account. So that is the resident state of the recipient. Exit taxation also. When you leave a jurisdiction, a member state, transfer your seat from one member state to another or abroad to third countries, then you have to pay taxes on the retained earnings, strengthening the resident state's position. Well, the same is true for the GAR, similar to what I have noted in respect of the OECD approach. And here we also have a CFC rule included, which is more the traditional CFC rule, as also advocated by the OECD, because the Anti-Tax Avoidance Directive wanted to implement the OECD IDs for the internal market in order to avoid disparities and unequal competition between the member states. Well, single taxation, there you see also the OECD BEPS 2 coming back in respect of hybrid mismatches, reverse hybrid mismatches, and tax residence mismatches. So if there is a double deduction, that should be reduced to a single reduction. And actually, if you look at the rules, it doesn't matter much from a principal way, whether it's in the state of origin or in the investor state. If one of the two does not apply it, then the other one should do it. Starting with the state of origin, but not only there. So in this way, we see that also the European Union has the three-pronged approach. Well, going quickly to the national experiences then, the US Tax Cut and Jobs Act. Well, often you read that it is a transfer to territoriality. But the overall assessment may be true that that is not completely the case, but that only a small part of the US Tax Cut and Jobs Act is territoriality based in respect of revenue, the budget, you could say. Well, indeed, they have included now a dividend received deduction, which is a kind of participation exemption, but it only applies under very specific circumstances, and for instance, not for capital gains. The foreign derived intangible income deduction, that is a deduction that you get a reduction in taxable base if you receive income from intangibles that are used abroad. Actually, this is more or less an export subsidy. So you may wonder whether that can be upheld, because it's similar to what you could say what was the repeal of the sales source rule. That was a deduction that could deviate between 15 and 100%. If the goods were sold to foreign customers and used over there. So that has been repealed, and you could say that that strengthens the position of the US, because if the products were produced in the US could not tax. And now under the new rules, it can be done, but take into account the FDII as well. Well, base erosion and anti-abuse tax. That's actually an additional tax. First, you have to calculate your regular tax based on the regular deductible expenses as well, for interest and royalties, for instance. But then you have to recalculate it and exclude them, like royalties and interest. And if then the tax would be higher than your normal tax, then you have to pay an additional tax, and that's the BEAT. Well, and the interest barrier rule is similar to what you could say, what we also see in the OECD line and also the ATED, that is a kind of EBITDA or EBIT reduction, so that not more than your EBITDA, 30% of your EBITDA can be deducted. Strengthening the worldwide taxation seems to be more important under the US Tax Cut and Jobs Act. Also literature that has been advocated, especially the transition tax. That was all the retained earnings which were untaxed, for instance, stored in Barbados or something like that, by companies like Apple, Google, etc. They had to pay a tax, and that could end up with a sort of, I believe, for cash on 50%. Also, and that's more or less similar to a kind of TFC rule, is that the global intentional low tax income, for income that was generated from intangibles but parked on low tax jurisdictions, that they are taxed nowadays, and that reduces directly the problem that was taken into account by the European Commission in the Apple case, because nowadays it does not remain untaxed, although the percentages, the tax rate, maybe 10% or 13 or 40%. So, but the 21% available nowadays as a regular rate, and also the refining of subpart F, maybe because it's. And again, here we see also a single taxation approach in respect of hybrid entities and hybrid transactions, and that will be then a denial of deductions. Well, the Netherlands, as a last national experience, what we see here that the Netherlands has a reputation, to put it mildly, around the globe in respect of international taxation, that it is used for transferring income, channeling income over the Netherlands to other countries. Well, in order to build reputation, you could say, the government of the Netherlands will introduce, as from January 2021, a conditional withholding tax on interest and royalties. This is really source only. The payment comes from the Netherlands. It has nothing to do with origin. Absolutely is inconsistent with origin. Well, the single taxation approach, that's we see also by the recently announced legislative proposal on informal capitals. If you have products or interest-free loans that are granted to the Netherlands, for instance, then you have to take into account what would be the arm's length price. Well, that gives you the arm's length price as the basis for a depreciation, or that you should take into account a market interest where there is an interest-free loan. Well, that will not be longer the case, is the idea, and legislative proposals will be introduced in 2021 if there is no compensation, no taxation in the other country. So there you see that the arm's length principle will be frustrated. And I think that this inconsistent with the principle of origin, also the ability to pay principle and the direct benefit principle. And we have a proposal of the left-wing party, and that actually is focusing on companies like Unilever and Shell that are considering to move the headquarters from the Netherlands to the UK. But it is widely framed, so it covers much more companies than that. But they will face it directly because they are considering it. What is the idea? At the moment that they leave the Netherlands, they will tax on the retained earnings. And that will cost Unilever, according to the calculations, about 11 billion euros. That may be an issue when you are thinking of transferring for other reasons than taxation from the Netherlands to the UK. This is, and it will not be taxed if the other country levies a dividend withholding tax. But the UK doesn't do so. So here you see that a single taxation is the issue. Well, finally coming to conclusions, some conclusions. What you see, I think, the trend over the last years, 8 years, maybe a decade, is that the position of worldwide taxation and single taxation has been strengthened. I'm not in favor of that. I am in favor of strengthening territoriality taxation, but then based on the principle of origin, because then you pay the taxes where you create your value, where you build your ability to pay, where you benefit directly from the infrastructure. The trend is, I think, not beneficial for capital importing countries, but especially for capital exporting countries. And this may also lead to the conclusion that the trend is detrimental to low income and middle income countries, what we often refer to developing countries, and that the benefit is there where the traditional OECD members are the high income countries. These are my ideas, and thank you very much for this part. Thank you.
Ok, obrigado, Eric. Nós estamos com o tempo quase esgotado.
Thank you, Eric. We are almost due in our time, so I pass the floor to Amanda, and I would like her to, because I want to make some final remarks. Well, I would like, in fact, to thank IBDT for the opportunity of being here moderating this panel. And I would like to thank on behalf of Professor Luis Flávio, and thank also the organizers, Professor Rodrigo Maito and Schweri. And in fact, I would like just to summarize all that was said during this panel. Currently, we have a globalization scenario, as Monica mentioned. Companies, they are using sub-companies, a global chain they have for performance. And in this sense, we analyze how Brazil's taxation is happening. As Professor Gustavo mentioned, in fact, is different from what the world is doing. And what I would like to say is that if Brazil keeps on being different from what it's happening worldwide in terms of taxation, Brazilian companies, when they're trying to go abroad, wouldn't they lose competitiveness with this position? And to improve this development, perhaps Brazil in the future, shouldn't it fit itself to what is happening with global change and then bring better stimulus for our multinational companies also due to time constraints? Brief words and food for thought I would like to place. Thank you, Professor. Thank you, Amanda. In fact, your question, we don't have a simple, straightforward answer, yes or no. It depends. And I would say that you're gaining from Fernando's question. This is a $2 million question. But due to time constraints, I would like to thank all our panelists. I'm sure that all those here with us this morning, the attendees, made the most of what was addressed. And now I thank all. And I wrap up this section and invite you for the next section. Thank you very much.